What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. Is it a buy right now at these prices? The overall summary of 2021, the direction that the market is headed, and what you should be doing right now inside of the stock market. And only if you feel this video gives you a better insight on the stock market, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out and you don't want to miss it. Let's get into the video. All right, guys, I put a lot of thought into this video for you. So we're going to be covering several different things that I really believe is going to give you good insight, good confidence in the market, and overall the future, of, being successful. So right now, we can see that it is a absolutely bloody red day, for the growth stocks in the market. Because if we scroll up a little higher, we can see that the S&P 500 is green again. Dow a little red, NASDAQ green again, and then that Russell, those small caps, getting obliterated once again. So before I give you the summary of the SoFi stock and things that I'm seeing, just know that to sum up 2021 in a nutshell, okay, there was a big shift in February with the inflation. The big money hedge funds control 80% of the stock market. They fled to those proven fundamental names inside of these indexes. And that's why these indexes have surged 30% this past year. And anything that was, new growth, small cap got smashed. So a lot of young people such as myself, we want to get in on those early names for that future growth, that future disruption. It does not matter what the company was, it likely got just absolutely smashed for the past, 5, 6 months, since the beginning of February. That should not discourage you from buying more of these companies right now, because I'm telling you, the smart money is buying slow and steady, along with the hedge funds, putting pressure with shorts on some of these new growth names. And a lot of them are going, really, really low, getting cut to 70, 80%. That likely shouldn't happen if it's a solid company. So you need to really make sure you do your research on multiple earnings reports to make sure that the company can really bounce back and that big money is buying your company. And we know that SoFi Technologies is a SPAC stock. SPAC stocks are the most beat up sector inside of the market, if you want to call it a sector. SPAC stocks are just getting blasted to smithereens. I'm talking 50, 60, 70, 80% losses, guys. What that tells me, though, is that is not a bubble. Okay, a bubble is the exact opposite, with SPAC stocks at 40, 50, 60, $70, 2, 3, 4, 500% gains. So it's the exact opposite of a bubble. So right now, if you can find the high quality names, that's giving you an amazing buying opportunity right now, such as the SoFi stock. We know that big money hedge funds such as Daniel Loeb has invested, $500 million inside of this company, along with SoftBank. They were buying this stock over $20 to $22 months and months ago. Right now, we've seen institutional ownership really ramp up, the past couple of days after that earnings sell off. So this tells me that this is a great buying opportunity right now. And sure, right now everyone's down a lot, but it doesn't matter. If you can just fast forward 6 months, 1 year, 2 year, you'll know that this company will be in a much, much stronger place in the future. So looking at the 1 month chart, we've sold off from that 1750 massively the past 4 or 5 days. But if we look at the 5 day chart, we're bouncing around a little. Okay, yesterday I bought in a little higher around 1420, just because I like the bounce. But today, guys, was brutal for growth. I mean, this could be one of the worst days for growth, maybe a top 3, top 4 worst day I've seen in the market. I mean, growth got absolutely smashed today. So once again, this stock could easily fall to 12, $11. It's definitely possible. There's no telling what the shorts game plan is. They're putting a lot of pressure on these SPACs, but this is one that the big money is definitely loading. So you could just buy, maybe once a week. Just keep buying. If the price is still sitting low, just buy once a week. That's a good game plan. You don't have to buy every single day, on these sell-offs, but this is a ridiculous buying price right now at 1378. We can see the last 5 days we had a low of about 1360, bounced up to 14. 50, 14, 60. And then today, was a really red day. We're selling off into the close down 3%. So this is a really good buying opportunity. Trades at around 11 times sales. Growth is 74% year over year. Member growth increased 113%. So I put a little game plan together just to give you more of a summary of what's happening in the market and what you should be doing right now. Just know the NASDAQ, S&P 500, and Dow Jones are at all-time highs. That's what I said in the beginning of the video in February. Smart money just transition their money into companies with proven fundamentals, even though they might get smaller growth, not taking those high-risk plays on those newer growth stocks. They got a great run on these indexes the last year. And if we go to the top of the NASDAQ to the bottom of this recent sell-off, it's about a 2.5% correction. And we know big money investors are wanting, a 10% correction. That's what all the bears are talking about. So this thing is not corrected at all, about 2.5%. Same thing with the Dow Jones at all-time highs, 25% gain this year. And if we click the top to the bottom, about a 2% sell-off. So this has been a really nasty week inside of the market for the big indexes. But if we look at the Russell 2000, small caps from the peak, before that sell-off in February, we have a, 9% correction, way larger than those big massive indexes. So small caps have literally been doing absolutely nothing this entire year. This is an index that's down, close to 10%. That's pretty big. Investors have dumped the small caps, new growth, high growth, the up and coming, higher multiples, and transition into the 2021 proven companies with solid growth, heavy weighted in the indexes. If you're wondering why that S&P is green today and that NASDAQ is green, just look at the indexes, the weight. Just take a look at the weight, guys. Apple, Microsoft, Facebook, Tesla, Nvidia, Adobe, and just go to the companies today that are moving, the big money companies. Look, Nvidia, Microsoft, and Netflix and Adobe. This is why these indexes won't stop moving. Netflix, Adobe, Nvidia, and Microsoft. These are the most heavy-weighted stocks inside of the market, and that's where the big money has been putting their money. And, those stocks are getting solid returns this year, 30, 40%. But I'm telling you, if you can, be patient and hold some of these newer, innovative, disruption companies, you can blow out 30% gains, in a year. It's definitely possible. It can happen really quick with these smaller cap names. Right now, you just want to avoid companies with declining business models that lack innovation, declines in customers, declines in revenue, and bad management. If your company follows, all of these things, you're going to be set up very nice for 2022. Potentially the end of the year once this inflation blows over. Avoid anything China, government crackdown, China control, security breaches, investigations. They don't care if they destroy their companies, market caps in half. Just avoid them all. Didi, Alibaba, Tencent, Pindu. I mean, these have sold off ridiculously. They don't even care about their companies. They're only worried about control. So avoid China. Avoid EVs. 80% of the EVs are pre-revenue. Most of them just listed to secure funding. Fisker, Lucid, Arrival, Nikola, Hyliion, Lordstown, Workhorse. I mean, none of these companies have any revenue at all, from, car sales. They're all pre-revenue. So those are my two biggest things right now in the market. Definitely avoid China and definitely avoid EV for now. Where you should be, I believe you should be in smaller caps over 2 billion market cap and under 20 billion market cap, as well as SPACs that have those, fundamentals that I just went over. So we've seen, looking at these indexes, the Dow and the NASDAQ are at all-time highs, while the, Russell 2000 is almost at a 10% correction. So I don't believe you should be buying at all-time highs. I believe you should be buying at all-time lows. You want to be buying that new growth, increasing customers, multiple proven earnings reports, strong disruption, confirmed price target analyst upgrades, confirmed hedge fund holdings are buying. If your company has every single thing in this category, you're going to be very successful in the future. A couple companies I really like that have sold off today that I'm, surprised they're selling off so aggressively, is ApeCoin. They thrive off the Microsoft 365 cloud that migrates, manages, and protects the data in the cloud. Customer base has grown from 6 million to 7 million. Revenue increased 38%. COVID has shifted the company to full-on overdrive. People may work from home forever, along with 5 to 6 buy ratings, 0 sells. This is definitely a buy right now. Customer base has grown double year over year, 113%. Revenue is up 74%. Passionate about getting people's money right, offering no fees, the lowest rates possible, and a one-stop shop to fit all of your needs as a customer. SoFi is definitely a buy right now. Crazy, crazy growth. There's so many other, companies that went the IPO route with a much higher valuation. PaySafe, sports betting has just begun. Revenue increased 13%, 48% revenue growth in iGaming. Made 2 acquisitions that will set them up for a great 2022. Half the states are not even legal to gamble yet. It's so early in this play right now, and I'm telling you, if we look at what the big money is doing, the big money is definitely buying up PaySafe and SoFi right now aggressively. And once again, I really believe you should be buying SPACs. If you look at these SPAC stocks, all these companies have ridiculous growth and they have sold off massively. Butterfly Network, Tattoo Chef, Desktop Metal, ChargePoint, Matterport, Opendoor, Skills, STEM, Bark. These are all companies that are going to be very successful in the next 1 to 5 years. You're buying at the absolute bottom. You have the shorts depressing these stocks massively, having nothing to do with fundamentals. I believe these are great buys as well. And guys, in the link below, this is my Patreon. I did a little update today because the market was selling off very aggressively just to give people more confidence inside of the Patreon. I said 2 of the biggest hedge funds are loading SPACs. I really have been doing a ton of research today, and the SPAC market has insane opportunity. Shorts have destroyed the entire sector because they know retail wants to get in early, and 95% of the SPACs are garbage, so they're able to bring them all down at once. For the entire 2021, there is only 5 SPACs over $20 per share. This is the exact opposite of a bubble. The most beat up sector in the entire market is SPACs. I think as long as you avoid SPACs under $7, you will kill it in 2022. So, because let's be honest, there's no reason a high quality SPAC should fall under $7. That just wouldn't make sense. Cathie Woods likes them cheap, cheap, cheap. My God, she's been loading tens of millions, possibly close to $100 million in SPACs the past couple of months at crazy low prices and valuations. I have been watching closely. These are her favorites right now. Just look at the deals she's eating up because she did the research and has confidence at these prices. 3D printing, Blade at $772, buying aggressively. DNA Sequence, Quantum Sci, $854. 3D printing once again, Mark Forge, $861. Real estate, Opendoor, $475. She's buying dirt cheap. You think Daniel Loeb didn't do his research? This guy has a $4 billion net worth and owns over 150 stocks. These 2 SPACs are both in his top 9 out of the 150. Third Point LLC spent over $1 billion in these 2 names. PaySafe at 829 and SoFi at 14. Guys, the big money is buying these SPACs. So there you go, guys. $2 billion hedge fund, money management teams are loading up SPAC stocks. I just gave you, 6 right there. 2 that I've been recommending aggressively for PaySafe and SoFi. So this is what the big money is doing. They are buying these dips, even with the overall market, hedge funds shorting the crap out of all these SPACs. You got to do your research and find the high quality names and just hold them and buy when you can. Buy once a month, once a week, once every 2 weeks. It does not matter, but you definitely need patience in this market right now because inflation has really killed 2021, and the hedge funds and the big money has fled to those proven names that we've seen in the NASDAQ and the Dow Jones. And only if you feel this video gave you a better insight on the stock market or the direction that the companies are headed, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it, and I hope you have a great day.